Hey everyone, welcome to Tech Overdue. We've got a lot to cover today, so let's jump right in.
So what if I told you that some of the sharpest investors actually make their biggest gains when the market is crashing? Yeah, it sounds completely backward, I know, but it's a very real, very powerful strategy. Today, we are going to break down exactly how it's possible to make money from a falling market using something called regulated short selling.
Okay, so let's get right into the core idea. At its heart, short selling is really just a way to bet that a stock's price is going to go down, not up. I mean, think about it. Most of us are taught that investing is pretty much a one-way street, right? You buy a stock, you cross your fingers, you hope it goes up, and then you sell. But what happens when you see a company that you just know is overvalued, or maybe it's heading for some serious trouble? Well, short selling is the tool that lets you actually act on that belief. And this slide just lays it out perfectly. Over on the left, you've got your classic going long strategy. Buy low, sell high. We all get that. But on the right, going short completely flips the script. The whole goal is to sell high first and then buy low later. I know. It sounds like a brain teaser, but stick with me. We're about to see how that's even possible. So how on earth can you sell something that you don't even own? Well, it all boils down to two critical, interconnected financial tools that make this entire thing work. The first piece of the puzzle is stock borrowing and lending, or SBL for short. You can almost think of it like a library, but for stocks. You've got these huge investors like pension funds with massive portfolios of shares that are basically just sitting there. The SBL system lets them lend those shares out to other investors, and they get to collect a fee. It turns a sleepy asset into something that generates income. Pretty smart. And that brings us to the second tool, regulated short selling, or RSS. Now, this is the actual strategy where you put those borrowed shares to work. It's the act of taking the stocks you just checked out from that stock library and immediately selling them on the open market. This is the sell-high part of that topsy-turvy equation we just talked about.
And when you put them together, SBL and RSS aren't just some niche tricks for traders. Nope. They are fundamental, foundational parts of developed capital markets all over the world. They're what helps make our financial systems more sophisticated and, well, more efficient.
All right, so we've got the concepts down. Now let's see how they actually come together in a real trade. We're going to go step by step. So let's walk through the life of a short sale. It all starts when an investor, let's call them the borrower, identifies a stock they think is going to take a dive. They use the SBL system to borrow those shares from a lender. Then, bam, they immediately sell those borrowed shares on the market and pocket the cash. Then, they wait. And if they were right and the stock price falls, they then buy back the exact same number of shares, but now at the new, lower price. Finally, they return those shares to the original lender, pay a small borrowing fee, and whatever is left over, that price difference, is their profit. And this is the absolute key. That profit is locked in from the gap between the high price they sold at and the low price they bought back at. It's the complete mirror opposite of a normal trade. But hold on, it's not a one-way street here. What about the original owner of those shares, the lender? Well, as this quote points out, for them, this is a fantastic deal. Their portfolio was just sitting there gathering dust anyway. By lending out the shares, they get to collect a fee, generating extra income on their assets with almost zero effort. It's a win-win. Now, I know what you might be thinking. This all sounds a little bit like the Wild West of finance, right? Like traders can just gang up and drive down prices for a quick buck. But that's where the most important word in the whole process comes in: regulated. There are really strict rules in place to make sure this